by the management and earnings candidate. We're joined by Sachin Gupta, the CEO and whole-time director of Share India Securities. Hi, Sachin. Thank you so much for joining us today.
Thank you, ma'am. Thank you for inviting me here.
All right, Sachin, let's look at your numbers, and your overall numbers in Q2 were pretty strong, both on a sequential basis as well as on the year-on-year basis. Firstly, what are the factors that led to the growth in Q2? And as I can see, even your broking clients are up 35% sequentially, which is marking a threefold increase from Q2 of FY24. So tell us what has led to that as well.
Number of factors worked in our favor. One, definitely market participation was good overall. But on Share India side, we focus more on, in last 2 years, we focus more on retail side, for which we started providing the MTF services to the clients. And we saw huge growth, huge demand in MTF, and Share India book stands around 250 crores on by end of September. Secondly, we focused on the merchant banking side, helping some companies to getting listed on SME side. That also gave us good revenues. And recently, we also started the institutional desk, where we impaneled 113 institutions with us in last around 1.5 years. So all these factors focusing on the fee-based businesses helped us a lot. And going further, our focus is in increasing the retail business overall.
Okay, hi Sachin, this is Snehi also joining in the conversation. Now, sequentially, if you take a look at your margins, they've come in at 42% versus 37%. It's an uptick of almost 500 bips. Tell us what's led to this growth, and on a long-term basis, what's your overall outlook when it comes to margins going even ahead of the second half of FY25?
So, ma'am, as we can see that our EBITDA margin is around 42%. So, we believe that we'll be able to maintain these kind of margins going further. As we compare, it has gone up by 500 BPS in year-to-year basis. The reason is that, as I explained, that we started some new verticals for which we have to incur some initial costs for the infrastructure, for manpower, for everything. And now these verticals have started giving some revenues. So at that particular 2 quarters, our margins were low, but now we're back to our basic margins. So we are very hopeful that we're able to maintain these kind of margins going further.
Right. Also, Sachin, what would be the key growth drivers for the company going forward, and how are your growth numbers looking for tier 2, tier 3 markets?
Ma'am, going further, our focus will be on the fee-based businesses more. As I explained, retail, so we are going very aggressively on the broking side, retail broking side. We are focusing, or we have just established some our own branches, like in main cities. And from those cities, we are catering to the nearby tier 3, tier 2 cities. And we are getting very good response, and MTF is one product people are really looking for, and Share India is aggressively pushing that product into the market. And second, merchant banking again, it's a pan India based business we are doing, and we are helping companies. And this year we see that many companies will be listed in SME using Share India services. So that's another focus area in coming 2-3 years. See, merchant banking, we are very bullish, and if you see next 5 years, so this can be a full-fledged independent division. Institution desk, we just started, it's a very young division, and we are very happy that in 1 year only we got 113 empanelments, and very good institutions are working with us. Going further, this business will also grow, and we can see good numbers coming from this side. And another thing I just want to inform through your channel, ma'am, our board has recently approved for the wealth company, where we will focus on providing investment products like AIFs, PMS, and all, which Share India is not providing at all now. So going from here to next 5 years, I believe fee-based businesses will be in focus, and investment products will be in focus. So we'll venture into wealth in next 6 months. So we are at the company formation stage, just got approval from the board. So putting all these new verticals and effort, we believe that growth will come from all these divisions.
Sachin, sounds good on that note, but also help me understand, with a lot of restrictions coming in the F&O segment by SEBI, how are volume numbers looking like for the industry, and on the back of this, will we see some kind of lower participation from the retail space? And if yes, what kind of growth numbers are you looking at?
So SEBI is really concerned about the retailers who are making losses in the derivative side. So people are taking more speculative bets these days. So the SEBI's role is, to overall develop the market in a right manner, that they want to ensure the sustainability of a client for the longer period in the market. For that, they have put some restrictions, which I believe will definitely lower down some volumes, but I cannot quantify in terms of percentage. But yes, there will be an impact on the volumes. But as Share India, we don't have much concentration and much dependence on the one division. So we are well spread it out. We have made a sustainable model. So we believe we'll revive our revenues in a quarter or two. There will be adjustment. There will be, there will be a little bit lackness in maybe for 3 months, but in a quarter or two, we'll be back with the numbers. So we have to see how the industry will react and how the things will be accepted. So first from 20th November, SEBI has announced, but effectively we'll see later November side things will change. But I think Indian markets and investors are very smart. They will adapt according to the new situation. And as far as retailer is here in the market, so market will grow. And if we look at India's growth in next 5 years, politically we are stabilized. If the geopolitical reasons get good, so India is one of the best country where we can bet on, and we have huge potential still left on the table for the retailers' participation. In coming years, we should not be surprised that retailer participation will even grow further from here. But yes, with the more cautions, and this is what SEBI wants. So I'm very hopeful with this business. India will grow, this industry will grow.
Also, Mr. Gupta, you mentioned that your company has announced incorporating a subsidiary company, offering CAT3, AIF and PMS services. Could you shed some light on that? And what's the growth potential for private wealth space HNIs for the company?
So this is one space which is actually, left out in recent past. So we have seen, 14 or 15 odd crore demat accounts. A lot of people are trading options or derivative side. As the India is growing, as people have more money in their hands, so wealth management, also the demand for the wealth managers has gone up. Now, if we quantify how many companies who are giving the AIF and PMS, you can count on fingers, correct? And the people who are actually taking the wealth management services are far lesser than the demat accounts. So we believe that with the growth of the country, the demand of wealth management will grow up. So as I said, we believe in the diversified verticals. So Share India board has approved for the wealth management company where we will be offering AIFs, category 3, category 1 maybe, and PMS services to the clients. And this particular division should be very, very good in next longer period, like 5 to 10 years. So in a longer vision, Share India will develop, a complete financial company, and where we'll be offering different products to the clients at one roof. So client does not have to, go out for any of their financial demands.
Okay, and well, also lastly, help us understand that your company has announced raising up to 150 crores via non-convertible debentures for working capital needs. Are we also going to be looking at further fundraise going ahead, or would this be all for the moment?
Sorry, ma'am, I think it's 50 crores. So we have just, offered 50 crore. We are planning to get the 50 crores NCD. So that will be 50 plus 50. Green shoes option will be 50 crores. So definitely this is for the MTF, as MTF is growing and we are focusing more on the MTF side. So this money will be consumed there primarily. And as I said, in next 3 years, our MTF target is not less than 1,000 crore book size. This is a target we have set internally. So if the MTF grows good, then we might go for the further NCDs. This depends on the overall demand in the MTF division, ma'am.